Last week, the dollar yen, euro yen, Australian dollar yen, and New York Dow reached a convergence point. Congratulations to those who were able to take profits. Now, let's take a look at the financial market forecast for this week from November 17th to 21. Will it be buy the rumor, sell the fact? How will the markets move this week? These forecasts are derived from statistical analysis based on data from the past 200 weeks of FX, interest rates, and 17 other financial markets. So, let's dive right into this week's convergence points. In other words, the profit-taking targets. USD JPY is 153 yen and 45 sen. EUR JPY is 178 yen and 32 sen. AUD JPY is 100 yen and 31 sen. Nikkei 225 is 49,288 yen. Dow Jones is $46,479. The 10-year JGB yield is 1.71%. Gold is $3,938. We expect markets to converge around these levels. Rate cut in December? Although the reopening of U.S. government agencies briefly boosted sentiment, a series of Fed officials expressing reluctance toward rate cuts caused the stock market to lose momentum into the weekend. If the long-anticipated December rate cut doesn't materialize, equities may enter a correction phase. That, in turn, could trigger the collapse of the AI bubble, so caution is warranted. USD JPY, stock markets correlation. Normally, when expectations for rate cuts fade, the US-Japan interest rate differential remains wide, creating a bullish dollar and weaker yen environment. However, things have been different recently. Risk-off flows triggered by falling equities have strengthened the yen, making yen appreciation the dominant trend, something we should be mindful of. Technical analysis of USD JPY. Looking at the USD JPY chart, we see continued battles around key technical levels. It dipped below the important support at 153.67 once before rebounding. A break above 155.05 would be bullish, while a failure around the current 154.60 area could signal a downturn and justify selling. In short, we're in a difficult zone, where the market can move either way. A rush of key economic indicators. The U.S. September employment report, postponed due to the government shutdown, is scheduled for release on November 20th. Additionally, a series of major economic indicators, such as inflation, will follow one after another heading into December. Since equities have risen to near record levels on layers of expectations, once these key indicators are released, any negative surprises may have an outsized impact. A market that rose on expectations may fall sharply when confronted with reality. An uneasy mood in the markets. As mentioned last week, U.S. equities driven by AI-related stocks have hit record highs, but the downturn has already begun, giving the market an uneasy tone. With major data releases coming one after another, financial market volatility is likely to increase. Maintaining appropriately sized positions will be essential. Also, if the dollar strengthens sharply and the yen weakens, we must stay alert to the possibility of currency intervention. Please note that these forecasts are based solely on a statistical convergence model, and we bear no responsibility for any investment outcomes based on them. That concludes this week's market outlook. We'll continue bringing you forecasts grounded in data and statistics. We hope you'll join us again next week. Thank you for watching.